Hey, what's going on, guys? It's me from Gains and Mindset HQ. Now, if you follow my live stream at all, then you know that it runs from through the time the market is open for 24 hours. So, obviously, since it's a little bit earlier here in Asia, we've already started with the live stream. And I'm just doing this video right now so that way people who aren't able to watch the live stream can still get the information. And just like the live stream, this will be entirely free now and in the future. So, don't worry about the fact that there are some videos on other channels that cost money. None of that stuff matters. If you want to learn more about trading, come over to the live stream or subscribe to this channel. We keep it 100% free. Okay, so let's go ahead and get straight into today's topic, which is gonna be 5 mental traps that every single gold trader falls into and how to actually escape those traps. Because, look, there are tons of different factors that determine how gold is going to move on any given day. But none of that really matters unless you have the correct mindset when you're approaching the market. So, before we get into this video, I do want to mention that we are expecting gold to be bearish in the new week. I mean, as you can see, we had some pretty strong selling towards the end of this past week. We had that big red candle with huge amounts of downward momentum, and the momentum has continued into today. So, we are going to be looking for shorts in the new week. And I'll probably make a separate video later today or tomorrow or whenever we get a chance just talking about our outlook for next week. But for this video, we're going to be talking about these 5 mental traps that every single gold trader falls into. The first one is revenge trading. Now, revenge trading happens when traders feel the need to recoup their losses as quickly as possible by taking unnecessary risks. So they might chase some risky trade setups, hold on to losing positions for too long, or just generally try to make back their losses in one fell swoop instead of focusing on the process and sticking to their trading plan. Instead, what they do is they let their emotions get the best of them. They panic. They try to make back their money super fast. They take dumb trades. They blow their account. And unfortunately, I see this happen all the time in the gold markets. For example, let's say someone's down $100. They think, okay, I'm down $100, but I'm only down $100. So, I got plenty of room to work with. I can risk another $100 on this next trade, and if I win, then I'll be back even. So, they go ahead and take this trade. Well, they lose that next trade. Now they're down $200. Okay, they think I'm still only down $200. I can risk another $200 on this next trade, and if I win, then I'll be back where I started. Well, guess what happens? They lose again. Now they lay down $300, and this cycle continues until eventually they blow their entire account because they were trying to revenge trade and get back those initial losses that they had taken. The key to avoiding the revenge trading trap is to stick to your trading plan. Don't let your emotions dictate your trades. Just because you had a losing streak doesn't mean you should change your strategy or take more risks than usual. Instead, focus on the process and the things that you can control, and hopefully the wins will come eventually. The second mental trap that traders fall into is not knowing when to cut your losses. This is especially common among newer traders who may be hesitant to take profits for fear of giving up a winning trade. But in reality, cutting your losses is just as important as letting your winners run. If you're not willing to cut your losses, then you're never going to be a successful trader. It's just that simple. For example, let's say you enter a trade and your stop loss is set at $10. You might find yourself in a situation where the price moves against you and you lay down $9. At this point, many traders will start to panic and they'll move their stop losses further down to try to avoid a loss. But this is a big mistake. Don't ever move your stop losses just to avoid a loss. Instead, stick to your original plan and be willing to cut your losses and move on to the next trade. By doing this, you'll be able to minimize your losses and increase your chances of long-term success in the markets. The third mental trap that traders fall into is thinking that gold is rigged. Now, this is a very common mindset, especially nowadays. People believe that gold is rigged because they see large movements in the market that seem to defy logic or reason. For example, let's say you're following a trading strategy and everything is going according to plan. You're seeing positive results and feeling confident in your abilities. But then suddenly the market takes an unexpected turn and you find yourself in a losing streak. At this point, many traders start to question everything. They begin to think that the market is against them and that something must be rigged. Maybe it's the broker, maybe it's the market makers, maybe it's the central banks. But in reality, these things are beyond our control. Gold will always have large wild swings, and it's our job as traders to adapt and adjust accordingly. So, don't waste your time thinking that gold is rigged. It isn't rigged, it's just unpredictable. And if you want to be successful in this market, you need to be prepared for anything. The fourth mental trap that traders fall into is being unprepared. This is a very common issue, especially among newer traders who haven't had enough experience to develop the necessary skills to navigate the market successfully. So, they lack the knowledge and the confidence to make informed decisions. As a result, they often find themselves caught off guard by sudden market movements and they're unable to react effectively. One way to avoid this trap is to educate yourself about the market and develop a solid trading plan. Also, practice on a demo account first before you jump into the real thing. By doing this, you'll be able to gain the necessary skills and confidence to navigate the market successfully without falling into the trap of being unprepared. The fifth and final mental trap that traders fall into is not having realistic expectations. Now, many traders have unrealistic expectations about the markets. Some think that they'll be able to double their money in just a few weeks, while others think that they won't have to put in any effort to be successful. But the truth is that trading is a highly competitive and challenging field, and success requires a combination of skill, experience, and dedication. So, don't fall into the trap of having unrealistic expectations. Set realistic goals, and be prepared to put in the hard work and effort required to achieve them. Understand that success in trading doesn't happen overnight. It takes time and dedication to develop the necessary skills and experience to be successful. So, don't expect to get rich quick. Instead, focus on learning and improving over time. By doing this, you'll be able to set realistic expectations and avoid the mental trap of having unrealistic goals. So, there you have it. Those are 5 mental traps that every single gold trader falls into and how to escape those traps. Remember that trading is a game of skill and experience, and success requires patience, discipline, and a willingness to learn from your mistakes. Avoid these mental traps, and you'll be well on your way to becoming a successful gold trader. If you enjoyed this video and found it helpful, then please leave us a like and consider subscribing to the channel. Also, make sure to join the live stream. We are streaming 24 hours a day, 5 days a week. So, if you have any questions, feel free to ask them during the live stream. Otherwise, I'll see you in the next video. Thanks for watching.